Welcome to the How to Financially Prepare to Buy a Home series. This is part 5, student loans. Now, here at How to Buy a Home, I don't deny the difficulties that the new generation of first-time homebuyers are facing. I acknowledge them, I accept them, and then I help you find the solutions. Student loans, they are not insurmountable. They're not a gigantic obstacle. They do not prevent you from home ownership. And in fact, when you buy strategically while you're still paying down your student loan, you can get out from under the student loan burden much sooner. It's time for education, solutions, hope, and the truth about your student loans and how it affects your home ownership dreams. Let's go.
How to Buy a Home educates, protects, and connects first-time homebuyers to qualified vetted realtors in their area. Whether you're looking for DIY information or step-by-step guidance, How to Buy a Home is the #1 resource for first-time homebuyers.
What up, How to Buy a Homies? I'm David Sidoni, and this is part 5 of the How to Financially Prepare to Buy a Home series. Student loans suck, but what sucks worse is the misconception and the bogus myths that they are keeping you back from buying a home. They are not. They're just another form of debt. And every day, the banks approve mortgages to people who have debt. Otherwise, they would have no customers for their home loans. What's important for you to realize is that your total student debt, that doesn't matter. Forget about that big number. Once you know how the banks calculate your mortgage worthiness, that's where you're going to see that you have a solution that will not only help you own a home sooner than you think you can, but it's also going to help you grow your wealth faster, because as a homeowner, that's what happens. And that will help you eliminate that beast of a burden of your student loan once and for all. So tip number 14, it's something I'm going to take a little time on. It's breaking down student loans and how they affect you buying a home. I'm going to offer the solutions to buying with that monster loan, and then I'll even give you some deep details on the latest student loan news and some tips to help you manage that debt. Things have changed a lot. I understand that if your parents went to college, there's probably a good chance they walked off campus with a diploma, memories, probably a hangover, but not a giant pile of student debt like we see people have today. Because today, it's a totally different game. A little more than half of recent college graduates have finished school with some sort of student loan. For the class of, I went back to 2023, it's the most recent one I could find, borrowers with a bachelor degree walked away with about $29,000 in student loans. And if we look at all the federal student loan borrowers, not just the fresh graduates, but everyone in the system, the average federal student loan balance is just under $40,000. Now, look, I know that some of you would love to have a balance of $40,000 because that sounds like couch cushion money compared to what you owe. So this is for everybody, whether you're tens of thousands or hundreds of thousands in student loan debt. I know this is an issue because back when I first recorded this episode years ago, I was freaking out because the United States student loan debt hit $1.6 trillion. That was back in 2019. If you fast forward to today, I'm recording this at the end of 2025. The student loan debt number is around $1.8 trillion. This is not just a little leak in our economic boat. This is a full-on iceberg of doom, and it's been building for decades. Back in 2019, there was a lot of talk about student forgiveness and new programs that were going to help out with the student loan crisis. In the earlier episode, I went into detail about the history of how we got here. Let me give you the short version today. It's that tuition at four-year colleges exploded back in the 1980s, along with attendance. College costs, well, they went a little nuts. They have risen way faster than everything else in our economy. Faster than inflation, faster than family incomes, faster than wages, faster than my blood pressure when I hear people say, we're just going to rent for one more year and see what happens. So here we sit, 2025, $1.8 trillion in student loan debts, and roughly 1/4 of that $1.8 million debt, that's owned by people 50 years old or older. Now, there are some economists out there that think that we're in a student loan debt bubble, and it might pop someday and tank the entire economy. Now, I don't know if that's going to happen, but I do know that the best way to protect yourself from any bubble, any recession, or any economic downturn, to keep that from wrecking your life, that's to own property, have some stability, and be constantly increasing your net worth. That's what this episode's about. And frankly, that's kind of what the whole podcast is about. Home ownership, that is your hedge against inflation and recessions. It's one of the best and most straightforward ways to increase your net worth over time. The average homeowner is roughly 40 times wealthier than the average renter. That's 40 times wealthier. So the big question is, can you attain that safe, stable, net worth growing solution of buying a home while you've got a student loan? Yes, you can. Can you get the safety net of home ownership if you have such enormous debt? Yes, you can. The answer for most of you is yes, you can. Once you understand the system, how it works, and how you can access your personal solution. Over the last almost 7 years here at How to Buy a Home, we have coached and guided tens of thousands of home buyers. And a lot of them have had $100,000 in student loan debt, $200,000, even $300,000 in student loan debt. And we've helped them successfully find the solution for a home purchase for them. One of the biggest inaccuracies that aspiring first-time homebuyers assume is that the total student loan number, the gross total number, that number is keeping them from getting an approval for a home loan. That big number is keeping them stuck as a renter. It is not true. We've helped people with humongous, like PhD debt, doctorate debt, medical student loans. People in the hundreds of thousands get approved for a home loan and help them become homeowners and still keep everything within their budget. They discovered that they had options they didn't think were possible, and they found it was in their financial best interest to own a home now, start building wealth, and then continue to chip and pay away at their big student loan. Now, here's the reason why. The banks that approve your home loans, they don't care about that total. They only care about the monthly payment that you need to make and how that affects how much you can pay monthly for a new home mortgage. So right now, stop thinking about your total debt owed on your student loan. Heck, your total debt owed on anything, credit cards, cars, everything, but especially on your student loans. All that matters is the monthly payments and how that affects your debt to income ratio, also known as your DTI. This is what the lending institutions are looking at. They're basically asking, all right, can you handle this new house payment alongside your other monthly debt payments? And a lot of people don't realize that. They think that these lending people are looking at your total debt and they're going, whoa, wait, you owe $200,000 in student loans? No house for you. It's not how it works. Debt to income ratio, DTI, and it works like this. What is your monthly student loan payment, monthly car payment, monthly credit card payment, and how does that compare to your monthly income? So I don't care if it's $30,000 or $300,000 in student loans. The total doesn't matter. What matters is the monthly payment against your monthly income. Now, I could stop the podcast right here. That's literally all you need to know about how student loans affect your ability to purchase a home. But since I'm a research and education junkie and I like to give you as much information as I can, here are some other tips for student loans. As of the end of 2025, mortgage guidelines for student loans are changing as we come out of this student loan forbearance and forgiveness period. But in many cases, yours might work like this. They're going to use your monthly student loan payment that you pay right now if it's clearly documented on your credit report or in your loan statements, even if it's under an income-driven plan. Now, if no payment is showing, some programs like FHA will use 0.5% of your loan balance to estimate a payment. The conventional loans, they'll use 1% of the balance if there's no documented payment. Or sometimes, the way things are going right now, they can create a documented income-driven amount for you. It's a big year for student loans this year, and things are still evolving. So don't automatically assume that you have to grind away at your loan for 10 more years before you even think about buying a home. Because for many of you, the smarter play is own a home sooner. Lock in that payment. Start building equity while you keep chipping away at the loan. But you need to know your personal numbers. Things are changing a lot and changing often. So don't do guessing based on an article or a website you read. It could be outdated or just plain wrong. And actually, not even to what I say here. I'm giving you general information. I can tell you with experience from tens of thousands of different buyers, there are more possibilities when you talk to the right people. Getting with a unicorn realtor and a lender who love first-time home buyers and are experts in what you are looking to do, they're going to be able to show you the scenarios that are happening right now. Don't believe the myths that student loans make you untouchable. And if your numbers don't work today, sometimes you can rework your payment. Your payment can be reduced by restructuring your loan to make the numbers more mortgage-friendly. Once you find a payment that fits into a smart and well-thought-out debt-to-income ratio, Your student loan doesn't have to continue to be a burden or an obstacle that keeps you stuck in the rent trap. Now I'm going to get into the nitty gritty. Here's some general information on things that are happening with student loans right now. A lot's changed since I recorded this in 2019. And people are wondering, dude, hey, is forgiveness an option now? Will the big government come and save me? Back then, that was a big question. But here's what happened. Some of the programs that were doing that back then, they're still available today. Things are a little bit different the way they work today. Now, back then I mentioned these programs, and these programs are still available today. The PSLF, Public Service Loan Forgiveness. There's also income-driven repayment plans, IDR. There are plans that offer forgiveness for teachers, nurses, and some public servants. And there's discharge for total permanent disability, some school closures, and other different situations that fall under what they call borrower defense. So those are still out there, but the big one-time blanket cancellation that everyone was hoping for, that got blocked by the Supreme Court in 2023. But instead of ending that idea completely, the government used these existing programs and some new rules to target specific groups. By early 2025, roughly 5 million borrowers have had some or all of their loans forgiven through the fixes in the PSLF, the income-driven repayment adjustments, and some of the other targeted programs. Over 1 million public service workers, the teachers, the nurses, and the government workers, they've seen their loans wiped out under a much more functional PSLF. And we do have a new IDR plan. That's the SAVE plan I mentioned to you. It's Saving on Valuable Education. Under SAVE, depending on your income and family size, your payments can be significantly lowered under the old plans. Unpaid interest, it's not going to balloon your balance the way it used to. If your calculated payment doesn't cover the interest, the extra interest doesn't get added. And after a set number of years, 10, 20, or 25, depending on what kind of loan you've got, the remaining balance, that can be forgiven. That is a big shift from the old, you paid 20 years in and your balance right now is bigger. That's a horror story we've heard several times. Now, are these new programs right now that are working perfect? Nope, not at all. Are there still some hoops? Yeah, definitely. You have to enroll properly. You have to certify your income every year, and you have to keep track of the servicers because they're changing all the time. You have to keep an eye on letters and deadlines and sometimes fight to get mistakes fixed. So the updated end of 2025 take is this. You still can't count on a forgiveness fairy godmother to show up for you. But if you've been paying for a long time, if you work in public service, if you're eligible for IDR, it's now way more likely that some of your monster debt might actually get chopped off by these programs. So as always, make sure you talk to a tax professional about whether this forgiveness could be taxable at the state level and how long current federal tax breaks on forgiveness might continue to be there for you. Now, here's another big tip. I know a lot of people have multiple loans, and so they're looking at a consolidation. Consolidations make things simpler, putting all your loans into one, but it can actually hurt your chances for an approval for a home loan. So ask questions with a first-time homebuyer lender professional before you get deep into consolidations and make big moves. And I know there's a lot of talk out there that by doing that, you can qualify for PSLF or SAVE, or it's going to help you get rid of some weirder old loans that you've got. But keep in mind, it doesn't magically lower your interest rate. The new rate is going to be based on a weighted average, and it might reset your progress towards any sort of forgiveness program that you could be eligible for right now. So consolidation is one of those moves where I want you to make sure you talk to an expert first and don't just do it as sort of I'm drowning, I got to fix this right now. And for the love of all things holy, don't stop paying your loans and ghost the system. That's how you're going to get wrecked and push your dream of home ownership way down the road. Call someone who's got the expertise and make sure that you're talking to people with expertise in student loans and home purchasing. Ask your questions and get a plan. Because if buying a home is your goal and you're here, so I'm guessing it is, I cannot stress this enough. You need to include your lender professional in all your financial discussions. We're talking about what's going on with your credit cards, paying off loans, getting a loan, everything. You always need to talk to them, and student loans especially, because if you don't, you might be doing a great job in fixing your finances and reducing your student loan debt, but it could actually be really postponing your ability to purchase a home. It's a balancing act, and it takes expert guidance. I do recommend that while you don't let student loans hold you back from your home purchasing planning, that you also might want to use this opportunity to get deep and research what's going on with your student loan. I know a lot of you maybe just pay the bill and bury your head in the sand and haven't looked at it in a long time. I believe that buying a home is going to be the fastest and best way for you to accumulate wealth, which will be the fastest and best way for you to eliminate large debt like a student loan. But there are some people out there that are helping people just focus on how to eliminate a student loan. In fact, back in 2019, I mentioned a guy named Adam Carroll. He's a fantastic resource. He's the student loan guru. He did a documentary called Broke, Busted, and Disgusted, all about college debt. And right now, he travels the country talking to tens of thousands of students, teaching them how to handle their student loans and their money the right way. He's all about building a bigger life, not a bigger lifestyle. He likes to say you want to avoid the being a baller on credit and broken real life trap. Using discipline today, now, so you can buy yourself time and freedom later. Don't end up being one of the people who's still got a student loan when they're in their 50s. He's got a saying, if you do for 2 years what most people won't do, you can do for the rest of your life what most people won't be able to do. So I'm going to tack this on to this episode right now. These are some lessons, some of his hacks for eliminating your student loan debt. Now, bear in mind, his hacks are just for reducing your student loans. Not all of these are going to work when you're trying to build up a savings account when you're trying to buy a home. And this doesn't just happen with student loans. This happens with everything. There are people that come to me and say, I want to pay off my $10,000 credit card before I buy a home. And I'm like, well, it's the winter right now. There's a lot less competition and you have a better chance of buying now with less people trying to buy the same home. You have more choice, more selection. And if it's going to take you 6 months to eliminate $10,000, well, by the time we get there, there's going to be this spring buying rush and there's going to be a ton of people out there buying a home. It's going to be more competition and the home's going to cost you more. So what if we find a way that you can buy a home while you still carry that $10,000 balance? So it's the same thing with all these tips for what Adam tells you about reducing your student loan debt. Buying a home first, it's going to set you up with so much freedom in just a few years. Imagine if you didn't have to worry about your rising rent payment. How much extra money would you have to reduce your student loan in 3 years, 5 years, or 7 years when you have that fixed payment? So make sure you check with your mortgage professional to see what are your options right now. Can you buy with this debt? And then you could figure out what you can do after you close on the home. It's all a balancing game. But in the interest of keeping you fully educated, I'm going to give you his hacks to reduce your student loan ASAP. But I'm also going to add some of my hacks on how does this help you buy a home faster. Hack number 1, make extra payments towards principal. Again, if you're saving to buy a home, this might be something that you do after you buy because that extra payment you should actually be putting into your savings account so you can purchase a home. But here's how it works for future reference. All right, the big fact about student loan, their interest is front-loaded and it accrues daily. That's why your balances feel like it barely moves within the first few years because a big chunk of your payment goes to the interest and not the principal. The longer that your principal stays high, the more interest you pay over the life of the loan. So if you're in a place later on, after you've purchased a home, where you have some extra money that you can put towards your loan, make sure that those extra payments go to the principal. Call your servicer. You have to call them and tell them, apply this extra payment to the principal of loan X, not to future payments. Don't assume that they're going to do the right thing by default. And of course, if you have multiple loans, target the high interest rate loans or the small balances first. This will help you with the snowball and make sure that you're getting things paid in the correct order. Now, hack number 2. This is an interesting one, and it can help you with your debt to income ratio. Looking into refinancing the loan that you've got. Now, this is great because you might get a lower payment, which can help you with your debt to income ratio. It can also mean that you pay less interest depending on the refinance that you do. Pay down speed, it's highly dependent on interest rates. Refinancing private or some older loans with a lower rate private lender can sometimes drop your monthly payment, shorten your payoff timeline, and save you a ton in interest. Now, some of the people that Adam talks about are Earnest and Common Bond, that they've been doing this for a long time. And there are others out there that do it too. It can take just a few minutes online to see what offers are available to you right now. But if you refinance your federal loans into private loans, keep in mind, you might lose access to your income-driven repayment plan, to your PSLF, or to future forgiveness expansions. So if you think you might have any chance of benefiting from any of those things, be careful consolidating or refinancing federal loans out of the system. That's where you want a professional to help you run the options, and make sure you check with the lender professional to see how any of these moves would affect your home purchasing power. Now, hack number 3. He mentions this one, and I love it because I see it as a way to use real estate to help you slay the student debt dragon. This one might sound familiar to you if you listen to literally any other episodes of the podcast. If buying a home is in your future, consider real estate as part of your payoff plan. Here's a simple version. You buy a duplex, like a 2, 3, or 4 unit property. You live in one and you rent out the others. Use an FHA loan because you can, with as little as 3.5% down, as long as you live in one of the units of the property. Well, your tenants help cover the mortgage, you gain equity over time, and you can pay down the student loan while the property grows in value. You can use the cash flow from the rent to attack your student loans, or in the future, if you get equity in the property, you can refinance and move that money around to restructure your debt. Now, today, end of 2025, if you're listening to this then or in 2026, I'm assuming that affordability is still going to be at a pretty tough place. Home prices are high, mortgage interest rates are high. So the math is not going to be like, hey, buy something and you can get instantly rich with a house hack. But in many markets, using some sort of house hacking, especially for the first 3 to 5 years that you live in the property, it can be one of the fastest ways that you can accumulate some wealth and start using the extra money for that student loan debt. You're going to be building equity. And if you're in a position that you've got enough money coming in, that cash flow, you can throw it at that dragon of student debt and slay it much faster than if you're just trying to do it based on using your savings alone. Okay, so bringing this back to you and your home buying plan, here's the main thing that I want everyone to take away from this episode. Your student loan number, that big ugly total, it is absolutely not the whole story. Most people today very likely can still get approved for a home that they're looking at in their budget before the home loans are gone. And unfortunately, in the world today, it's pretty much the only way you're going to do it, or you're going to be renting till you're 45 or 50. And burying your head in the sand and waiting for the forgiveness fairy godmother or some other kind of relief to come along, it's not going to be the most beneficial thing for you. As I record this, there are still some options with that, but you need to make sure you have an advocate that's in your corner and helping you navigate through it. Overall, owning a home instead of being a renter, that's still the strongest tool to help you build your wealth, change your trajectory, and get you in a position that no matter what goes on with your student loans, you're going to be able to eliminate them sooner. So I know a lot of people out there with student loans are just putting their nose to the grindstone and working. But don't sit in the dark and paying that minimum payment and assume that you're screwed and that you can't be someone who can buy a home. You don't know what you don't know until you talk to a unicorn realtor and an experienced first-time home buyer friendly lender who can work with you and talk to student loan specialists, even perhaps a tax specialist, so that you have a full team showing you all of your actual options, showing you the capability of what you can do so you can add stability to your wealth plan and you don't end up being part of that stat who's paying off student loans in their 50s. Bam! That is student loans. Now, I've got more financial tips to help first-time homebuyers see the opportunities and the possibilities coming up in part 6. So if you're not subscribing and following, do so right now, and that'll come directly to wherever you listen to your podcasts. Homies, don't believe the negative myths. You can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyaHome.com to get started.